Welcome back. I'm Jeremy Szafron. Before we get to gold and silver, let's begin with this news from the Federal Reserve because the FOMC has decided to cut interest rates by 25 basis points, exactly as expected. Now, there were three dissents. Austin Goldsby and Jeff Schmidt opposed the cut, while Murin argued for a larger 50 basis point move. Now, the new summary of economic projections shows that 6 of the 19 officials did not support a cut, and the median dot for 2026 is unchanged. And one more development that the market is watching very closely today, the Fed says it's also going to begin what it calls, quote, reserve management purchases this week, $40 billion per month in Treasury bills. It's a direct liquidity boost, and our audience pays close attention to this. Now, if you've been watching Kitco News, you know several of our guests have been calling for the Fed to move in exactly this direction. Now, turning over to metals, everybody is watching it. Gold's holding firm, even with this FOMC news, above $4,200 announced today. Silver is trading above $60, still almost touching records, nearly 20% above the long-standing $50 ceiling that held more than 4 decades. And if you've been following this program, you know one analyst called both of these moves and the market didn't believe him. Gary Wagner told this audience that silver was headed for 50. He said gold could stretch to 4,300 by year end. Now, today, both metals are sitting either just below or well above those levels. So today's interview isn't about whether he was right. That's already been answered. But this final conversation of the year is about what comes next, the ceilings, the new risks, and how to read a market that's moving faster than anything we've seen in years. Huh, Gary? Joining me now, of course, Gary Wagner from the goldforecast.com, our very own. What a year.
What a year. What a year. Thanks for having me. I mean, silver has taken so many by surprise. Yeah. This last move, even today's move, is phenomenal. We're looking at March futures, 62.08 and a half, 60. It's a fast market, $62.13 right now, basis the March futures contract. So we do have silver moving and moving aggressively to the upside. Every tick higher is a new all-time record high for silver. It reminds me of the days in gold when a couple of times every month we were reporting yet another all-time record. And silver was sluggish. It was very sluggish, meandering higher, but it had that double top right around $54, as you can see here. The first top occurred middle of October. The second top occurred middle of November. And once it broke above there, look at the size of this one candle. From 53.78, and this is a daily candle, to 57.015. Quite a move. So once silver was able to break above former records right around 54, again, March futures on this, it was up and away. Silver would trade really parabolic until it hit about 59. It consolidated for just a few days. And then, of course, on Tuesday, yesterday, we had a dynamic move in silver, moving from about 58.50 to $61, and now we're above 62.
Just
really
wild.
Exciting times. Really exciting times.
Yeah, I mean, you know, Gary, we know, right? I mean, silver has had decades of false starts and failed rallies. Why did this one behave differently from a structural standpoint? I mean, it looks a lot different from the chart.
Well, the only thing I could say is when we look at gold, you'll see that has been consolidating for about 2 weeks now. It has maintained, and this is based on the most active February contract in futures, a price point above 42. It came close to, but not below it. We've seen it wick, meaning intraday lows go below that point, but it's been fairly steady. It has moved in a manner in which we would call consolidation, and money moved, I believe, from gold to silver as a avenue in which they saw better upside potential in a shorter period of time.
Yeah. Hey, let's stay on silver just for a quick moment before gold. I mean, the metals, everyone is just watching them going into the holiday season. But I mean, you know, silver above 60 is not a typical market. And from your perspective, does this still behave like a controlled kind of trend, or does this now start to look like a market running ahead of itself, technically speaking? I mean, where do you think we go from here?
Well, if we're looking at the silver chart, you can see that we had from July through October, a slow and methodical move from about 37 up to the first of these double tops at 54. Considering that silver was trading at around 32 at the beginning of the year, that's quite a move. But it did correct, and that was, I believe, a very healthy correction. We needed that. Then it formed the double top middle of November and came down a little bit. It wicked to about 49. When I say wicked, I mean the intraday low on the candlestick chart. And then we saw this parabolic move. The parabolic move began last week of November, right around $50, and took silver to $59. And then we had another period, a short period, let me blow this up a little bit, but a short period of consolidation in which the lows that came in were below 60, but 57, 70, 69 in that area. And then these last 2 days, we have really seen it shoot up, specifically yesterday when we had a move in silver from $58.44 to $61. And now it seems as though we're settling down. We are at a new all-time record high in March silver, now 62.14, 62.15. And that's quite a move. We did see it under pressure earlier this morning along with gold, but just slightly under pressure. It did open well below its current pricing, and the low is just below yesterday's closing price or high.
Yeah, well said. All right, let's shift over to gold, exclusively gold, because it's holding above 4,200 today. Now, you projected 4,300 by year end, and that's what I like about you, Gary. You've always had a nice kind of conservative way about you. You're not just calling for 10,000, but you've been ahead of this call all year. I mean, I've been here 2 years, and it's been wild to kind of go back and review the tape. So, explain how the current slope of trend either supports or challenges that projection, and take your time. I mean, you can walk us through the structure, the pattern, the momentum behind it.
Well, when we look at what gold has done, the tact or angle from the lows that came in around August at about 3,300 up to the all-time record high was in no way that we would look at as what we call parabolic. That was really until Friday, October the 10th. And then we had a very short parabolic rise. It sold off the next day, and this is the highest close on record at around 43.69. And from there, we did get a healthy correction. The following day, it would go from around 43 and then close much lower at 41.45. It would continue to drift lower, kind of form a double bottom. The double bottom came in the last week of October, first week of November, and then it made what we're calling a lower high. I'm comparing it to the all-time record high, but it made a higher low. And as a market technician, we do have a range in gold, which is good. In other words, silver is a lot more difficult to call a top because, simply put, we've never been here before. So it is all speculation, and we might base that on volume and momentum. As you can see, volume on the gold chart that we're looking at has been consistently going down. Right now, we're sitting at 158,000. That's open interest as compared to 500,000 that occurred as recently as the middle of October. So volume has decreased. We are absolutely in the holiday seasons, but there's been very little movement in gold. We have held 4,200 effectively. We are not near the all-time record high. We're sitting just under 43, and that's what I was looking for to finish off the year. Obviously, it's more likely that as long as it holds, you see this one trend line that comes in. It's just a horizontal line right around 4,200. To me, that's a critical price support on a technical basis. It matches up with this one secondary top that was the lower top. But the fact that it came in and then made a higher high than the previous high, that is extremely bullish. The fact that it has gotten some momentum back, and you can see right now it is trading higher on the day in terms of net change for the day. It is now up about $25, $26 on the day. So that's quite eloquent for gold. It's certainly not near these tops, but we are at the price point in which we're seeing solid support, at least call it since the beginning of December. end of November above $4,200. And at the beginning of the year, I doubt that I would have made a statement that we'll see gold well above 4,000, 4,200 by the end of the year. It took so many people by surprise.
Yeah.
A lot of it was dollar based, but people are flocking to an intrinsic asset class that has had value by cultures and countries year after year, century after century, and that has not changed.
Yeah, well said. Okay, well, let's talk about what's not popular on the program. Let's talk about risk, because obviously every strong rally has a point where the market needs to take a breath. I mean, for gold, what would be kind of one technical level where you would say, okay, correction's underway?
Well, you would have to look at this line, this trend line that I've got just below 4,200. It matches this top that came in about the middle of November. And so on a technical basis, a close, not a wick, meaning not an intraday low, but a closing price below 42, 41.95 could signal the beginning of a correction. A real correction would, in my opinion, have the ability to take gold back to 4,000. That's the next level of major support, is really at 4,000. But we haven't gotten an indication. We've gotten a consolidating market, and that tends to be healthy. We do get consolidating markets before a sell-off, but more likely when we see it consolidating like here, it is right before a huge move to the upside. You can see that right here. It consolidates and then pops. Typically, after a big move, the market will consolidate. This was a higher high than the previous high, although it is not near the all-time record high. The fact that after it came down, we got this lower high, but then we had a higher low, and now we have a higher high as compared to the high that came in the middle of November.
Yeah. Wow, what a fascinating way to end the year. Okay, well, let's ask you the same kind of question for silver, Gary. I know you got to bring that chart one more up. I mean, what price kind of breaks you, tells you that the market is shifting from rally to retracement? And just to add to one layer, because as our audience knows, I mean, it's quite volatile. Explain how fast a correction could unfold in a market that's moved this quickly.
Well, the best way to look at it is if we look at a consolidation middle of July, silver's at 38, and then in August, it's at 38. It meanders. When I say meanders, it slowly picks up steam, breaking through 40, 41, 43. And then when it sells off, we have this big red candle. In other words, the day of the sell-off in silver, we had silver open almost just shy of $54 and then close well below it at 51. Those kinds of large moves down following a sizable price ascent is our first signal, but we need to see what we call follow-through buying. Now, in the case of this top here, the next day you had a small up day, but then you had a really strong sell-off. So in essence, from October 21st, when it went back to 48, beginning at $54, we saw a sizable sell-off, a $6 price decline, really in a short period of time from the middle of October to the end of October, so about 2 weeks. The key is that the breaking point, or a large red candle, meaning a significant move down, is an indication that we really need to watch to see if there's going to be follow-through selling or if it's consolidation like we're seeing here. Because the healthiest way silver can move up is a strong move up and then sideways action. Even if it comes down, for example, here it went from 59 down to 57. That's a $2 move. While that is not peanuts, it's a sizable move. It's something like the moves we saw here, where we saw $6 an ounce price declines. Now, the key is right now silver is backed off of the highs, but it's backed off above $62. Again, this is March futures, and that is significant. The fact of the matter is we've definitely broken above this consolidation that came right around $59. Now we're at 62. My upside short-term target not for the end of this year, but the first quarter of next year is anywhere between $65 and $68, Q1 2026, if we see silver continue to maintain this kind of upward momentum.
Yeah, well said. Oh, well, I mean, we just love to see the support at this point. I mean, in these prices. Okay, well, I just got to ask you quick here, Gary. I mean, what about the dollar? Just because, I mean, gold and silver have rallied against a firm dollar. I mean, technically, well, what does that tell you?
Well, the dollar has been firm in terms of the tops back above 100. That in the first part of November, and it started the rally at about 96. So that's significant. A 4% increase against the basket of currencies is weighted. Again, you can see this double top in the dollar, and then over, well, let's say since November 21st to current pricing, we have seen it break back down significantly below 100. We're currently on the index at 98.669, and today it has declined by 0.6%. So it's a significant decline in the dollar, breaking through this short-term potential support that comes in around 98.90, broke through there with a vengeance. On a technical basis, there really isn't any key support. If it doesn't hold this area, because there is some technical reasons that we would look for this to be potential support, although I don't believe that that will be the case. I think it'll drift lower. We want to look to see if it does drift lower, what happens at around 98.30. Currently, we are at 98.68.
Yeah, wow. 98.68. All right, Gary, I mean, you've walked us through the technical picture. You've kind of talked about gold pushing higher, even with that firm U.S. dollar. So let me wrap by kind of widening the lens just a little bit here. I mean, as we head into 2026, what are the broader market conditions that you'll be watching kind of most closely from your perch over there? You know, the factors that you think will matter for gold's next major trend going into next year.
Well, obviously, the economy, dollar strength or weakness, whether this sell-off from 100 down to 98 continues. Yeah. That's important. Another big change that's going to occur next year, and I think that people are underestimating how big of a change it could be, is a change in leadership at the Fed, because Powell is on his final days, and Trump is still making a decision as to who he's going to bring in to take the helm. For whatever people want to say about Powell in terms of the negative, he did a lot of good and kept the dual mandate focused clearly, which is inflation under 2%, although he never reached that target. And we do see cracks in employment right now. So we've got a troublesome scenario, potential scenario, that the Fed is going to have to resolve. Now, the interesting thing is that it has one primary tool, and that is to maintain, raise, or lower Fed funds rate, which controls interest rates pretty much worldwide, but definitely here. For inflation, we're still sitting around 3%. They want it to 2%. And the way the Fed would accomplish that with their tools is to raise rates. But with the labor market showing signs of weakness, the way that you kind of support the labor market and add jobs to the job force here in North America is the opposite. You want to lower rates. Mm-hmm. So how does the Fed deal with a dual mandate in which each of the dual mandates needs the opposite action to put a handle on it? In other words, to prop up employment, you want to lower rates. To get inflation down to the 2% target when it's sitting at 3%, you want to raise rates. So by virtue of seeing what they focus on, so they did do a rate cut, of course, today, but it's only anticipated, I believe, and I'm going to have to look closer at this, but there aren't going to be as many rate cuts next year as this year. This year we had 3. We're anticipating 2 next year. And it's going to be the leadership at the Fed and how that affects the economy that I'm going to look at most closely for a potential to really have a significant impact on not only the economy, GDP, labor force, but that as it bleeds into what we focus on, which is gold and silver or precious metals pricing.
Yeah. Yeah, well said. And it's even been hard to analyze. Although, as I mentioned, Gary, I mean, you've been pretty accurate here. Just quickly before I let you go, I mean, as we approach the holidays, because you brought up a good topic here. I mean, this time of year is usually quieter for gold and silver. I mean, based on the strength of this move that we just saw, I mean, do you expect metals to kind of cool off the way that they normally do during the holiday season, or is this year kind of shaping up to be different from your perspective?
Well, we're certainly not seeing that in silver. Volume has remained really active. If you look at volume right here, it's close to the peak that we got in October, and it's significantly above average volume through the summertime last year. So we're not seeing a distortion in terms of volume moving the markets unrealistically because of lack of liquidity. If anything, we're seeing a very active market with strong open interest, with strong volume in silver. In regards to gold, we have seen gold's volume decline significantly from what we'll call the end of the fall months, September and October. We had significant volume. We are seeing the decline there. So if we're going to see things slow down, we're certainly not seeing it in silver. We certainly are seeing it in gold. And that's indicative of the fact, first of all, it stayed above 4,200, but it hasn't made a real move to the upside. It's still within this range of around, call it 4,290 on the high side and 4,200 on the low side. And that tells me that we could see more consolidation in gold and possibly higher prices in silver as it uses this time to stretch that all-time record high and maybe close the year out significantly higher. Silver's right now breaking, as I said, broke through 62. If it breaks through 63 or stays in this area, that's what I'm looking for. I'm looking for stability because as long as it's moving up parabolically, I fear hard corrections on the downside. So we'll have to see. We're not seeing that right now.
Yeah, well said, man. That's what I've been hearing. All right, Gary Wagner, of course. We appreciate your insight, my friend. Happy holidays, of course. And check out Gary at thegoldforecast.com for more insights. You've been ahead of it all year, my friend. Thanks for this.
Thank you so much. I look forward to a lot of good interviews next year and want to wish all of our viewers a great holiday, happy, healthy, and prosperous 2026. That is my wish to you.
Well said. Can't believe it's already 2026 coming up. It just blows my mind. All right, Gary. Thanks, mate. Appreciate it. We'll see you soon. See you in the new year.
You got it.
Okay, with the Fed's decision today now in the books, a 25 basis point rate cut, a fresh wave of liquidity through those reserve management purchases. We'll be watching closely how markets digest this in the days ahead. Now, gold holding above $4,200. Silver north of 60 gives us plenty to monitor as we move towards in the end of the year and into 2026. Now, we'll keep an eye on every development and bring you the latest here at Kitco News. If you haven't already, make sure you hit subscribe. I'm Jeremy Szafron. Thanks for watching.